Hey, good evening, guys. Ken at Tortoise Capital. This is the Q&A session for the Foundations course for November 13th, 2021. And I guess two things. The first thing is we'll address the question that Ben had first, and then I'm going to go over just some of the highlights of the interview with John Bollinger by Jeff Boccaccio of our Tortoise community of practice. And there were a lot of interesting things that were covered in that. I think that confirms and reinforces the things that we do. And I wanted to make sure that you were aware of that recording. So the first things first, Ben asks, when I'm doing frames, it seems like I often go back quite a few bars and look for patterns and then frame out trades to completion. That confuses me a bit because I'm focused on finding the pattern that fits the latest bar, and I'm trying to come up with the rationale of going through the previous bars. The main thought that comes up is that I'm trying to establish the previous trades in the chain to see how they roll into the current trade. Is that what's going on? Should I move my focus back from finding the pattern on the latest bar to look at more of the unfolding chain? Yes, that is correct. So when I'm commenting on trade frames and doing coaching of the charts of others, I'm really commenting on all of the things that are going on in the charts. So, there's a couple ways we can look at that. One of them is that on any given chart, we're concerned about the hard right edge. That's the term of art. And that's the area in which we can do something. What should we do with this particular pattern? And there's a tendency to want to just zero in just on this. Well, part of what's going on in that situation are the other things that have been going on in the trade. Like, this should be seen as context for a particular trade. Like, for instance, although there was an upward trend here, the fact that it broke through here and did not make a higher low, like it didn't turn and go this way, which is what you would expect. In fact, it went this way. We can now think of that as an important piece of information about what's going on. So the fact that it broke here means that last move down informs our estimate of the possibility of another downward move. Now, you'll hear in the Bollinger interview that you can't know which way it's going to break ahead of time, but you can get a sense of what are the dimensions of the previous move, what is the context of that move, and use that context to frame what could happen in either direction from the trade bar that we're in. So if you only ever look at the bar you're in, you miss this context. The other thing is that by looking at these other trade patterns, you actually get to see how they start to shape out. Like, this one was a down up. There's our little lazy W. There's probably an SSC right in here, or a Kata 2, I should say. This might have been an SSC. And that could have been a Kata 2. And then you get a chance to see how those things unfold. You can see where the entry should be, what the trade was like, where the exits are indicated, and it's a chance to rehearse on the previous bar. So you want to get a sense of, in the time stream, that things go according to waves and boundary. Oh, there's a breakout. Oh, there's a breakdown. You want to get a sense of what these typical trade patterns look like when I'm in the market, when I'm out of the market. And it's looking at game film to see all the things that are there, not just the things that I'm looking for, but what are the things that I didn't see. And that's where new opportunities are coming from. So I'm trying to look at it with a questioning mind and with a curious mind and a learning mind. Okay. So now what I would say is the bar by bar trading is an important way to practice that live skill, where as each time that you're adding a new bar and you're making a decision, and then that thing starts unfolding, you're getting a chance to manage it in each little increment of time. So you need to do that too. So both of those are legit ways to manage your training time and use the resources that you have. All right. Let me pause there for a moment and see if you guys have any questions on that. Okay, it looks like it was pretty straightforward. So now what I want to do is I want to go over to the Patreon page and just say, those of you considering the TC2000 bundle, there's a post I just made that offers $1,000 coupon for the holidays for a great admin support tool. So that's available. There's also a $1,000 discount on the Danny's options course too, for anybody that's looking for sensible ways to do options trading on our swing trades. So what I want to show now is the interview that Jeff Boccaccio did with John Bollinger, and all the timestamps that cover the various elements of that briefing. The ones in black were really, I thought, pretty amazing. He's a big fan of relative strength. But at 41 minutes in, he starts talking about our regression line crossover Bollinger Band framework, and that he thinks it's an interesting and excellent way to apply the foundational pieces of his work, and gives us a shout out, and thinks it's very intriguing. And he sees a deep connection to what we're doing to the Wyckoff method. Wyckoff was one of the 5 titans of classical technical analysis from back around the 1900s, worked with Jesse Livermore and all those guys, kind of created technical analysis. And then a few other things. Talks about why he likes volatility and why we are all volatility traders when we are trading. How he uses Bollinger Bands to find tradable markets and then define opportunities in those markets. That's exactly what we do. He likes the idea, if he had to just pick one pattern, it would be mean reversion, because it's mean reverting. And that's the essence of our supported spring crossing and Kata 2. He also observed, as we do, that there's no magic bullet for picking the direction of a breakout from a squeeze. And that's the principles we teach with the Z3P and the super pinch, that you set the trade frame and you follow the price. And what you're looking for is a critical state that allows a larger than normal move in a shorter period of time in either direction, faster than usual. So your sharp moves out of critical states without trying to pick the direction. You let the price pull you into the trade. Also, the way he uses Bollinger Bands, markets, sectors, and company analysis, and what he calls rational analysis, as a strong use of relative strength performance overlays. And that's exactly what we do with the blended monthly rebalancing, which has been working for us for well over 20 years. And then his comment on about trying to predict the end of bull markets, that the most bullish thing is a market that gets overbought and stays that way, has sort of been what we've been saying every night for the last 3 months as this market continues to march up. And where we respect the stops and we stay exposed without believing in it, but we just kind of work it that way. And then his final comments really aligned with our little saying about you don't have to be right. You just can't stay wrong for too long. Follow the market. So this was a wonderful 80-minute tour through the mind of and work of, one of the 3 or 4 greatest technicians around today. And I got to just tell you that to hear him say those nice things about our work was really quite a shocking experience. It was humbling and rewarding in many ways. So, in fact, the Society of Technical Analysts has invited me to come speak to them in February, and some working on the topics that I want to cover. Anyway, that's everything I got for tonight. We'll get this published and posted. 8:30 tonight, we'll have the swing trade review. So keep your cards and letters coming. And we shall see you later tonight or tomorrow at 8:30 for the trading plan review. Okay. You guys doing okay in the course so far?